Hey, good morning. Let's go over today's trade plan. So in the overnight session, the buy side has been dominant into the 70 to 72 pre-market resistance, where so far we've seen a small sell response. Bigger picture, the market is still technically trading within a balance, and the big catalyst today is going to be the FOMC announcement at 1 p.m. Central Time and the Yellen press conference at 1:30 p.m. Central Time. Until then, the market can technically continue to balance within a range. So that means on the upside, we can still get sell side active at the 70-72 pre-market resistance and the 74 quarter to 76 quarter initial resistance zone. On the downside, we have support at yesterday's high of 65.5, and that's really more of a reference area where if the market's holding above it, it signals continued bullishness. Below that, we have pre-market support at 62 to 64, and the buy side can maintain the smaller time frame control as long as ES is holding above 62, 64. So heading into the FOMC announcement, the market may just continue balancing between pre-market support and either pre-market resistance or initial resistance. It's unlikely that we're going to see a big breakout ahead of the FOMC announcement. Now, after the FOMC announcement, the market can make a directional move. The market is already expecting a interest rate hike, so it's quite possible that we don't get too much of a response to the actual announcement, and we then get a response later after 1:30 p.m. Central Time based on the remarks during the press conference. So the main idea is to expect ES to continue to balance within a range heading into FOMC, and following FOMC, there can be some directional movement, and that's something we'll have to gauge in real time. In the event of a upside breakout, the market can quite easily test 78 to 80 quarter and perhaps even 84 half to 86 half if there is sufficient upside momentum, broad market strength, and if Nasdaq is printing a new high on the year. In the event of a bearish response, the market can quite easily come right back down into the 54.75 to 57 initial support, and in the event that the response is more of a liquidation type move, we can even go down into 50.75 to 52.75 and 46 to 48, depending on, again, the level of momentum and broad market weakness and how much volume we really start to see on the day time frame. So heading into FOMC, we're going to expect continued two-sided activity. That doesn't mean that we have to remain within the overnight range. We can go higher and test 70-72 and even 74 quarter to 76 quarter, but it's unlikely that we're going to break initial resistance ahead of FOMC. On the downside, we could go down and test the 62-64 pre-market support, and if we are seeing broad market weakness and downside momentum, we could even go lower into the 59 quarter HVN and the initial support zone, but then responsive buyers are likely to step in and the market can balance into FOMC, and then we can get some directional movement depending on the response to the FOMC announcement and to the 1:30 p.m. Press conference. So those are the main ideas heading into the open. Let's be a bit more careful this morning and make sure we're getting good location on any trades that we're taking and that we're not getting overly involved in short-term chop. And then based on FOMC, I think we'll get a better picture on where this market's headed. So those are our main ideas. Let's see if the buy side can maintain the overnight control, at least in the short term, and we'll take it from there.